Hey everybody, hey traders, Chris Pulver here. Welcome back to A Trader's Path to 100%, episode 3. The date is October 17th, 2023. We're just through some major U.S. news and we're looking to see what we have over the next couple weeks to close out the first month of the quarter. We're also kicking off earnings season in U.S. equities, so I want to take a look at some of that for the stocks and options plays as well as some currencies. So let's get started. I will begin with the Forex side of things with my positions on my portfolio builder account. This is a $10,000 account that is down about 190 bucks for drawdowns. Here's the pip totals for these 6 positions. I'm looking at just Swiss pairs right now minus the Swiss yen. We're talking about these essentially every day in the flex room. We're talking about these in a class I'm doing, at least with spot checks during the week. I'm looking at positive swap. I'm looking at great technical setups. And right now I'm upside down a couple hundred pips. But let me get that exact number as I'm doing the video live right here. So minus 70, minus 19.9, let's put minus 20, minus 36, minus 118, minus 56, and minus 13. So I'm down 313 pips, which again, maybe some of you are like, that's crazy. It's really not. This is technically looking to do what I want it to do. So if this is a low, this is a high, and all we're getting is a pullback, I'm looking to see either I get deeper pullback entries or we come back into a decent Fibonacci zone like a 38250 and I start to get filled for a wave 3. So my goal is at the very least, this swing to the upside, I'm looking for a retracement back up at least to this high, possibly back up into this pocket window here between around 96 and 9800. My goal is to be as aggressive as I can be, as safe as I can be, but also aggressive with any type of wave 3 push or any type of push back into this pocket window between the 127 and the 161 extension with a Fibonacci swing, trying to make as much money as possible. And a lot of these trades are setting up in that type of fashion. So the Aussie Swiss, for example, was a pretty steep pullback, and we're starting to rally a little bit off those lows. If this one is a 786 pullback, we're looking for symmetry towards the 127. We could also have a fifth wave move towards this previous high. There might be more to it. I mean, you can see the trend lines that I have. We've been in a downtrend since June of 2022. And even if all we did was gravitate back towards this outer trend line, I'm looking to see if we get into some open space and challenge a high. There's some pretty good pockets back in this level, some pivots and inefficiencies. And again, just kind of looking at some wave structure. So if it's wave 1, 2, 3, 4, 5, wherever that gets me, even if it's back to this high, maybe that's 6,200. I will take as much profit as I can at that area. Break even is around 5,800, so I'm looking at 400 pips with some add-on positions as well. And my goal is, if I'm going to take profit on these currency pairs, my goal is to try to make at least $1,000 per profit, which means I'm building up positions. I might take profit on 3 to 5 entries, but the goal is to get these really nice cash injections to start, making decent progress on profits. This account possibly takes 3 months, 6 months, maybe 12 months. We're going to get positive rollover. If we get positive rollover plus the pips and technicals I'm looking for, this is a big plan to double my account. So that's a little Forex trading. Flex wise, a lot of my robots are doing pretty darn well. I'm having one of the better years I can have in Forex trading, which is kind of nice. Here's my Flex stock so far for the year. We should be up around 35 or 40,000 pips. A lot of that has been automated. So 56,000 pips. This is the first year that I've considered trading full auto on a portion of the portfolio. I did this, last year we had robots running, but I did all manual trading. And 2022 was an okay year. I think we did like 30,000 pips in 2022. There's some wins and losses. Yeah, 27,000 pips, but we had a big battle against the dollar yen and Swiss yen, and that took a huge chunk of profit away. So I think I ended up taking, a 5 or 10,000 pip loss between those dollar and yen pairs. I still made some net profits on them, but it was an ugly, ugly battle with some pips. But anyway, it doesn't matter. This is 2023, and it doesn't matter what you do. Good year, bad year, just continue to trade. So anyway, automation's helping a ton this year for Forex trading. And I also wanted to make sure that everyone knows if you're interested in some of these trading strategies, inside my Discord channel, Chris Pulver Trading is the thread. I can post this link also in the chat or inside the description for the video. Check out this education link. And inside my Discord channel, this is a video series that I did back in like 2017, 2018. It's I think it's over 10 hours of video modules, somewhere between trading, market structure, support and resistance, trend lines, market mapping, all the major patterns that I like to trade. You can have this video series, and it is yours forever. There's also a little conference, a live session that I did with some friends of mine. It was hosted by Rob Booker. There's a panel of great traders that I've known for a long time, and it's an awesome little bonus session for about an hour or so. So enjoy that. And yeah, so back to the Discord channel. That's a full series right there. You can get off my Vimeo page, and then everything else goes through an online university. These are full education classes, video strategy guides, downloads, charting, robots. I think all of these have a robot component or automated component if you're interested. And again, if you have any questions on this, I'm not asking anybody to jump in here and just start buying a bunch of classes. If you have questions, use the free group chat, ask me, and I am happy to provide some more information on each one of these strategies. I would say that, if you're looking for Forex trading, there's great Forex strategies in here. If you're looking for stocks and options and trading rooms, I have a trial for my Flex trading room, which is for $27 for the first month. That's Tuesday, Wednesday, Thursday for a month trading Forex. And then we have Monday through Friday trading stocks and options with my Equities on Demand trading room. And we're super active with stocks and options, and we trade pretty much anything we can get our hands on. So anyway, that's it, my Discord channel. Let's go back to other accounts. So I posted this in my Equities on Demand Trading Room Telegram channel. We're kicking off earnings season this week, and we will have this running for probably the next 3 or 4 weeks. This week's it's pretty light, but it really kicks off with big financials. So Bank of America, Goldman Sachs, Morgan Stanley. Trying to think what else here. Charles Schwab was on Monday. And we have a couple other big ones sprinkled in here. Wednesday after market is Tesla and Netflix. We have AT&T, which is a big value stock. I have some shares of that with some dividends. We're taking a stab at Tesla with some credit spreads. We're looking at a credit spread straddle. Netflix, I couldn't get the pricing that I wanted. We're going to take a look at this on Wednesday here in the trading room. I might do a long straddle on Tesla. I might look at even a long straddle on Netflix because of the after-hour plays. I want to see that I can get the proper pricing. I'd like to see if I have, the Tesla side of things. I was looking today at like a $6 debit. I think that it's realistic that the $6 debit could become a $9 or $10 credit. So maybe we could take about 40 to 50% take profit on the overall risk. But we're gonna look at that tomorrow and see if it's priced accordingly. I typically look at like the 75% weekly trading range and let the volatility of the earnings plays give us the juice that we want. So we also talked about this morning in the trading room. This is Netflix, I believe, Tesla post earnings. That's what I was looking at this morning in the trading room. So what I look at is this. I want to see, what the big move is for a couple of days. So when we have our earnings open, okay, if we have our earnings play here, I think there's another one I can look at. So if I go post earnings and I go earnings history, so we take a look at earnings history. We have price movement within one trading day. So we have our averages. Okay, the average is around about 8%. So if the stock is trading, the stock is trading at 254, just to say right now, we're trading at 254 and we have a roughly 8% move. 254 times 8%, that's a $20 move with earnings. Now, we calculated something pretty conservative. We took the weekly trading range, which is right here. The weekly trading range, you can see at the bottom, it says 2264. So the average earnings play is around 8%, which happens to be about 20 bucks. Okay, so 254 times 8% is $20.32. The weekly average right now is slightly higher than that at 2264. So what I calculated was based on this weekly average, which is 2264, I calculated 75% of that, and I'm forecasting if I can price my options to at least see profit if price moves $17. That should give me a pretty good move on the week. So we're looking at a trade. Right now we did a credit spread straddle because if price goes higher and we're above like 257 or 260, we'll make some money. If price goes below 240, 250, we'll make some money. So I'm pretty much neutral on that, and we'll collect about 55 or 60 cents net profit. Even though it'd be more expensive to trade a straddle, I still like the idea of being directionally neutral because if we have a big hit and a big success on Tesla, that Wednesday after market and Thursday's open could be enough that we can take a big chunk of profit there. If I paid $6 for a debit and we have a big gap that's maybe $10, $15, $20, that's good enough for me to see that a $6 debit might be trading for an $8, $9, $10 credit, and I can take some profit. So I still like the idea of maybe evaluate and trade. If we take it before the close on Wednesday, we have the post-market move on Wednesday night. Thursday, the market opens. We either have a big gap up or big gap down. I'm hoping that that's enough to get us some profit. So by Thursday morning, or maybe even Thursday late morning if we have a decent push and hopefully there's a little bit more juice in that trade, meaning like if it gaps higher and pushes higher or gaps lower, pushes lower, I want to see if Tesla can do that versus gap higher and then fill the gap. Gap lower, fill the gap. So if we are gapping lower, gapping higher, I'm looking to probably take profit Thursday morning to opening bell. Okay, so we'll debate that in the trading room. But I'm just looking for some chances to make some money, to be honest. I mean, as far as like doubling my stock account, I don't have the big picture yet that I like. I still think we're in this kind of correction in the SPY. And as you'll continue to hear me talk about during this video series for the path to 100%, if I'm going to double my stocks and options account, I need to have a bit more of a directional bias. I mean, the toughest thing will be if price isn't going anywhere, we have lower volatility. Doubling your account's going to be just grinding. Like you might have to take trades week to week and just try to generate some income, and that's going to be pretty difficult taking 0.25% risks or 0.5% risks. But the reality is, I can be active with the SPY. I can be active with earnings over the next 3-4 weeks. We can take some stabs at the market. And I still think that the SPY being above 430 has room to get up in this 440 to 444 handle. To hit channel resistance. If we get that this week with some positive runs, I mean, one thing that's kind of nice to see is Tesla's a massive stock. If it moves up, it's going to drag the whole market with it. If Netflix is up, it's going to drag the whole market with it. Conversely, if it's a down move on Tesla and down move on Netflix, it could also drag the whole market with it. So that's why I'm interested in trading the SPY this week with a straddle, trading Tesla with a straddle, trading some credit spreads, and just trying to generate some income. And I will keep you posted how that goes. But again, if I can generate, let's say, 1 to 2% a week, I can do that. I can position accordingly. I'm not taking tons of ridiculous risks, and I'm not trading tons of instruments. My bigger wins and my bigger profits as far as ownership goes is going to take time. So if I'm looking to generate some big profits right now, it's probably going to be for some short-term trading. Could be week to week, which I'm trying to do a lot of with Delta Trader. And if we have some good intraday movements, I'm trying to sprinkle that in like we did last week. So here is my equities on demand. Let's go to Delta Trader. So last week we had a butterfly spread we took a small loss on. We had a credit spread that was a win. We took a partial profit there. Credit spread win, partial profit there. Then we had a nice straddle and a single directional play long put. So the week was pretty solid. If I added it all up, I think we were up like $2.40 for the week per contract. So not too bad. And yeah, it was pretty active, right? So minus 21 cents and then plus 13, plus 10, plus $1.23, plus $1.18. So $2.43 per contract on the week. I'm happy with that. So, one contract makes a few bucks, 3, 4, 5 contracts makes a few bucks. And yeah, so we'll just be active. So this week I have a straddle, and I'm also playing a butterfly just in case we show indecision. The butterfly is an opportunity for this 38-cent debit to become maybe $1.50 to $2. My straddle, if we hit I'd say 442 to 444, becomes profitable. If we hit 427 to 425, becomes very profitable. And I'll see if the market wants to give us enough volatility with some of those earnings plays this week. Some of the other plays that I've talked about, I like uranium. Some traders have been asking me, what about this? Commodity plays, I have some materials. I have steel, I have copper, I have aluminum, and I have uranium. Uranium has been one of my better plays. URNM, I've been in since about 37 to 30, $37.50 to $38. URA, same thing here, a little bit cheaper. This is more of an ETF on uranium. I was in this one around $23. So it's just starting, in my opinion. What I have in these yellow boxes is my symmetry. So if we have this first big swing, then we had this big correction cycle, I'm looking to see if our next big swing hits symmetry. So I'm in here around $26 or so. My symmetry gets me up to 40 plus. If we pull back and have past resistance becoming support for a fifth wave, I'm looking for this to possibly get up into $60. So there's some good upside potential and good asymmetry in URA, URNM. And it's not the only material play, but it's one of those that I think has taken off really nicely and postured well, so I'm positioning for that. I'm a little standoffish on tech right now. I think we've had a pretty good run. I'm watching closely the market breadth on something like this. The RSP is the equal weighted S&P. I told traders this morning. If there is a way that the equal weighted S&P comes down into 130, I would love to get a chance to start trading in here. It may not do that though. I mean, we're essentially flat on the year. If it's going to range and go back up, there's still some room to range and maybe the market breadth is a good thing. What can the market ignore? It could ignore about a bunch of geopolitical uncertainty. It could ignore the Fed right now. We have a rate decision coming November 1st, which is likely to be a pause. I was just trying to think ahead of what are the catalysts. I mean, it's Q4, which is historically bullish. Holiday trading is not that far away. The Fed's going to be neutral to pausing. Inflation data wasn't that great. It was slightly higher. If we take a look at the inflation print, that was last week's calendar event. So if I go into last week's trading, I think CPI came out on Thursday. And if we go the yearly CPI, 3.7 was 1/10 higher, but it was the same as last print. So we have seen the trend, right, from a peak of 9% and then quickly down. We printed as low as 3%, then up to 3.2, then up to 3.7, and again at 3.7. So the reality is, we're kind of in this stickier spot where shelter's higher, food, gas, energy higher. That is not core CPI. That is all CPI. But if you do like the super core CPI, that is still influenced by shelter and just tries to eliminate some of the outliers. But still, shelter, food, gas, energy is very very sticky at this point. I think it's going to be difficult to see this go sub 3% unless we have a job market slowdown. We're going to have some unemployment. We're going to have some softer wage growth. We're going to have some job losses. I think that's what the Fed's really focused on right now. If we don't have that and jobs continue to print solid and steady, then we're probably going to stay sub 4, but maybe above 3. And that still goes along with higher for longer in the Fed's. I mean, the Fed's trying to get below 2%. That's a long ways away from 3.7. Obviously 9% is scary. Sub 4 is fine, and I don't think the Fed's going to change their narrative. So all this being said, I mean, I have to watch and see what is the market capable of, right? Is there a catalyst to just kind of ignore a lot of the geopolitical stuff and let the market just rip for the rest of the year? If that is the case, interest rates are essentially pausing. The Fed's language and narrative is going to be about the same. Geopolitically, the market could ignore a lot of things. And I could see this. I could see the market getting back up into 444 on some positive earnings this week. I could also see the market as we kick off a real earnings season where next week we might have 6, 7, 800 stocks or 1,000 plus stocks. If the market breadth improves, I could see the market making a run towards the end of the year and still making this surprise, even a rational run towards the all-time highs. But if that is the case, I would be very cautious of a top and another correction coming back down. We could just have a massive, massive range. This could go back to a bigger range like we saw back in 2015 and 16 where the market was sideways. And this was around a 25% correction. And it was back in 2015, 16 as well. It's like a 15 to 20% range. So I do think there's room. I'm going to play it kind of week to week. And then if we start to see this area, I'll get a little bit more aggressive. We might look at some SPY options just to trade long calls. We might look at market breadth and see if we can start adding some covered calls. If I can start taking some profit off the table with stocks I own, it wouldn't take that long to make, $5, $6, $7, $8, $10 a share. Some of the ownership that I have, I mean, that would probably make, I don't know, maybe $10,000 to $15,000 on my account, on that $35,000 account. So that would be a nice increase in percentages and certainly look pretty good to wrap up the year. So you take in some short-term trades on top of that. Maybe I can end up generating, 15 grand, 20 grand by the end of the year. So again, that's if the market is cooperating to the upside. If we still have a range trade where it hits this high and starts to go lower, we'll take our stabs on some straddles. We'll look at some volatility and we'll continue to position accordingly. This 400 to 420 level is a big indecision zone, in my opinion. The bulls could take it back up. The bears could take it back down. I think this is where the market gets really, really choppy and really, really messy. So am I going to trade it and be super active? Just depends on how it sets up. We might look at some strategy neutral positions. We might stay out of it. We might just kind of wait for the coast is clear. And that's where I said in episode 2, I'm still playing defense on a lot of things. I have long puts on my protected stocks out to November 3rd. I will re-up those. I have some protected puts out to January of next year. And I just want to make sure that if I'm going to face a downturn in the market overall, then I want to have some protection on those positions. All right. So just really quickly running through this, I'll run you through what I did with Equities on Demand. So there's our SPY trade. We actually closed out a trade early for a small loss, but we're $6 or $7 behind our strike. So I just took the small loss and it's not break even, it's 8 cents, but my max risk was 60. So I don't feel bad taking an 8-cent loss. We did our credit spread straddle on Tesla. I'm going to look at a long straddle to get a call and a put and just trade the volatility with the post earnings report. Those are the earnings plays. These are the stocks that we have expirations on this week for stocks and options. So you can see that my trading room for equities on demand, we are pretty active. We stagger out some credit spreads. We have some months where we have a lot of expirations. But what's nice is I did the math on not the math, but I did the summary on this on Monday, and I believe we have 10 winners and we have 13 losers. But the winners, a lot of them are 2 contract trades versus 1 contract trades, and we're making more money on the winners than losers. And so far, the ones that are winning look really good that we don't have to close it out early. Some of them we closed out early for like 95% of the profit. And then we have some that if we have a broader market lift, we might get break even or better. We'll keep an eye on things. But it's a busy week. And so we started chip away at some of the management early on. All right. Delta Trader, I'll go into, we have the butterfly spread and we also have the straddle. I'm positioned for that right now. I don't know if we're going to have like a good single day move, but I'll keep my eyes peeled. Today we had a move around 433. Let me get back to this chart here. Just for some Delta Trader stuff, which is short-term trading options. What I was looking for this morning was we had a gap here and a gap here. I was hoping that price, after we gapped lower on the open today, that price would come down and fill this gap around 432, and then I'd look for a gap fill up towards 435 and change. You can see that price didn't come back low enough. It was okay, but there was a big level on my options platform that was down around 431 to 430, and I was looking to see if that's where we would fall and then bounce. So I was kind of looking at this gap fill or this equal low, and I'm really picky. If I'm going to trade zero DTE or same day expirations, I'm really picky on entry. I want to be really precise, and I want to be confident that I've got the direction, kind of nailed for the day. And so I didn't really love it, and I didn't take the trade, but there was a decent opportunity here, 432 and change up to 438. I mean, you had like a $5.50 to $6 move. We did in fact fill the gap. We went a little bit higher, but like I said, I'm looking more on the weekly time frame to see, do I have enough time this week to see price go up to 444 or down towards the low 420s? And this is our candle. If we go nowhere this week, that's why I'm trading the butterfly spread just in case. So we're going to surround that, and that's probably going to be what I'm doing from now until I have a better sense of direction, is just kind of taking some stabs and making sure I have reward to risk that's greater, right? And then Forex, we keep plugging away at our currencies, get some positive rollover, position on those wave 3s and wave 5s on those Swiss pairs. If we get a big move on the dollar, which I'm watching very closely here, the dollar on the weekly chart starting to show signs of stalling. Doesn't mean it's done yet, but I think that the dollar is certainly trying to put in a near-term top. This is another reason I'm looking for some risk appetite for the rest of the year. If the dollar ends up retracing, if the dollar ends up using this broadening pattern, guess what that means? A weaker dollar means a stronger stock market. So I could see the dollar being the sacrifice in order for Q4 to be positive in the markets. Maybe the SPY can get back up to 15 to 20% in the year. Maybe the Qs can revisit 25 to 30% for the year. If that's the case, I could see the dollar pulling back about halfway, being around the midpoint. And if it gets more accelerated than that, that's okay too. I wouldn't mind seeing a big rip in stocks. I wouldn't mind, my portfolio being green every single day, and I could be more aggressive and have a directional play. So if I see this, right, if I'm pretty confident that we have some decent direction with the dollar index and the stock market, then I will be trading more aggressively. I will look at, more call options. I'll look at more bull put spreads. I'll stagger out some expirations where I can generate some income over the next, 4 to 6 weeks or 8 weeks or whatever, or just stagger them out through the rest of the year. If we have weekly options and I can get 4, 5, 6 expirations before December 30th, I will do that, right? So I will do whatever I need to do to generate profit. If it's short term, great. If it's medium term, that's fine. If I'm waiting for positions and accumulation at lower levels, that's okay too. So there's no way I can control the market. It's just about being patient and picking the right trades. So I like what I'm in. I've got protection on stocks I own. I'm trying to be aggressive where I think I can be. I'm trying to play the probabilities and volatility that the market's given us, and just continue to trade different asset classes. So if you have any questions, let me know. Again, this is just episode 3 for Traders Path to 100. Just want to give you a heads up on what's going on. Broader market from Forex to stocks and options to the indexes. And I'll see you in the Discord chat, and I'll see you in the live sessions on youtube.com/ChrisPulver. And I appreciate all the likes and subscribes and all that stuff to keep the channel supported. And I'll see you in the trading rooms. All right, thanks everybody. Bye.